Welcome back, everyone. Today we are delving into the USDJPY chart to unpack the current market dynamics. After a 5-month break, we returned to trading last month, riding the bullish momentum which was driven by a robust US economy. However, the yen showed some resilience at some point during the previous month as speculation grew around the Bank of Japan potentially moving away from its current ultra-loose monetary policies, maybe as early as the month of March. Yet this potential shift lacked follow-through given the overwhelming strength of the US economy, and adding to the complexity is the US Treasury bond yield, which continues to find reasons to ascend. Now, the anticipation of the Bank of Japan ending negative rates as early as March has complicated the USDJPY market outlook. Stay with me as we dissect the current market structure. In this video, we will be using technical and fundamental tools such as the economic calendar, trend lines, key levels, and chart patterns to uncover the potential trajectory of price action in the coming week. Before we jump in, it's crucial to emphasize that this presentation is for educational purposes only and should not be considered financial advice. While our goal is to provide insights and enhance your understanding of price action analysis, always exercise caution and consider consulting a financial advisor before making any investment decisions. Now that we've set the stage, let's delve into the details. But first, if you are enjoying this content, don't forget to hit that subscribe button and turn on the notification so you never miss an update. So let's get started. So our point of contact this morning is going to be on the daily time frame, where I was able to take into consideration the nature of price action since the beginning of last year. That's about 13 to 14 month historical data, and of course this is what we have been using since the beginning of this year. And it's quite obvious that price action has been bullish, as you will see. After connecting the series of higher lows, we have an ascending trend line to work with, which also buttresses the strength of the buyers at this point in time. Now, in addition to this ascending trend line is our key level for this week, which is situated right at the 148.500, as you will see right here. And of course, if you look at this level, you will see how it has played a major role in determining the direction of price action since the month of September of last year. Between September and November, it was more of a buying niche, as we saw how sellers struggled to break through until finally we saw a breakthrough in the month of December. And since then, price action has remained below this key level to emphasize the strength of the sellers. However, in the last 2 to 3 weeks in this market, you will see that price action is back into the 148.500 area, and in fact at every point in time buyers try to break out of the structure, we have seen resistance from the sellers pushing price to the downside at every point in time to further emphasize the strength of the sellers around this area. Well, if we look at things from a technical standpoint and considering the bearish impulsive move that broke through that key level during the month of December of last year, technically we expect that some point in time price may come back, retest the structure, and incite a downward trajectory. However, what happened on Friday further emphasized that buyers are still present in this market, as you will see that engulfing candle right here on Friday, bringing price back to close around that key level at the 148.500. Now, you will agree with me that we are at a crucial juncture in this market. We are depending on how market participant react to this price level will determine if we are going to be buying or selling these assets. So the question going into the new week is, will selling pressure persist below this area, maybe as a result of the expectation of a pivot from the current ultra loose monetary policy to incite a downtrend scenario? Or will the US economy be so resilient to break out and retest the 148.500 to incite another wave of bullish momentum? Now, to navigate this current market structure, I have a simple setup we will be using on the 4 hours time frame. But before we go into the details on the 4 hours time frame, it's very important for us to keep tabs with the fundamental factors that will be affecting this market sentiment this week. And by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, looking at the economic calendar for this week, of course, we will be focusing on economic features from both the United States and the Japanese economic docket. Now, the first event for this week is coming in on Monday, that's February 5, and that is the Fed Chairman Powell's speech, which is considered to be an influential factor over the financial market, as his remarks provide insight into the Fed's policy stance, economic outlook, and potential future policy actions. The anticipation of his speech can significantly impact market sentiment as traders and investors closely analyze his rhetoric for clues about future policy directions. Then later on that day, we will be looking forward to the ISM Services PMI, which is a key economic indicator that measures the performance and expectations of the service sector in the United States. A higher than expected data typically signals economic expansion, boosting market sentiment, while a lower than expected reading may indicate contraction, potentially dampening investors' confidence in the economy. So we look forward to see what the actual data is going to be on this ones. But one thing for sure we know is that the anticipation itself has a tendency of influencing the market sentiment, which of course will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame. And right here on the 4 hours time frame, after considering the character of price action in the last couple of weeks, we have a simple range here. Now, looking at the structure, you will see that since on the 16th of January, price action has been confined within a 220 pips range that is between our key level at the 148.500 and the 148.350 to emphasize the prevailing uncertainty in this particular market. And of course, you know how we do it in this community. Whenever we have a range like this, we want to exercise patience and wait for price action to either break down the support line of that range to give us an opportunity to sell, or break out of the resistance line of the range to give us an opportunity to buy. Well, if you would ask me personally, I will say, considering the impulsive bullish leg that started this year, this whole range could easily transition into an uptrend continuation pattern where the breakout of the resistance line here will be all we need to capitalize on an uptrend continuation. However, considering the uncertainty surrounding the current market dynamics, we cannot ignore the potentials that sellers can also break through the support line of that range to welcome selling opportunities. But trust me, I will be with you in the comment section on Monday morning to give you update on what I think will happen after monitoring our participant in the market will be reacting to this current structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.